Noon. I am Yanni. We're going to be talking about the future of retail after COVID-19. I am from Northbridge Commercial Real Estate Group. I'm the co-founder of Tampa Bay Retail Alliance. My co-founder, Alex Wright, is going to be controlling the chats and all of the admissions and muting and unmuting you. Alex Wright is with Franklin Street. Our committee members, I don't know if you can see everybody, is Michael Ann Murphy from HUTTON. We have Sheila Suhar Wright from Highbridge. We have Tyler McRae from Meridian Retail Group. And right now we are joining the panelists, and I'm going to introduce each one of the participants. And then I'm going to give each one of them an opportunity to share a little bit about themselves as we get prepared to start. So I have Matt Partridge, CFO at HUTTON. I have Larry Silvestri at Silvestri Law. I have David Osterweil, founder of Fit Life Foods, and Vince Chalura, the Commercial Real Estate Division and head of Valley National Bank. At this time, Vince, I believe you have joined us. Would you like to take a moment to share a little bit about yourself so that we can become familiar with who you are?
Thanks so much. Sorry for the technical difficulties. It's been a wild ride the last 30 days and specifically this week, but Vince Chalura with Valley National Bank, run the commercial real estate lending group in this region. Valley is a $40+ billion institution. We're a middle market lender. I was previously with US AmeriBank and was part of the group that helped push that bank into about $4.5 billion before we were acquired by Valley 2 years ago. But do a lot of commercial real estate lending in this market and certainly have a big presence in the retail arena. So happy to be here and provide some perspective.
Thank you for joining us. Thank you. Next, Matt Partridge, CFO from HUTTON.
Hi, everybody. Thanks for having me. I'm Matt Partridge. I'm with HUTTON. I'm our CFO and COO. We're about a $1 billion plus real estate owner and a large shopping center, multi-tenant and single tenant developer across the nation, but we do a lot of work in the Southeast and particularly in the Tampa area. We actually have a project financed with Vince's team in the Tampa area. So I appreciate everybody having me, and I'm excited to be here.
Excellent. Next, we have Larry Silvestri from Silvestri Law.
Good afternoon, everyone. I'm a commercial real estate transaction attorney. After a few years in a law firm, I went in-house with tenant to do primarily real estate and leasing work. And shortly after that, went in-house with developers, where I was in-house counsel for about 25 years. In the 90s, I was with a company called Zaremba Group out of Cleveland, which did a number of different types of developments, but a lot of ground-up development of shopping centers. And then after that, I was with the Goodman Company in West Palm Beach for 16 years, which was primarily shopping centers and retail properties. And as general counsel of those two companies, my tasks always included leasing. So I'm now in private practice in St. Pete, and my pitch is I'm LarryTheLeasingLawyer.com.
Excellent. Thank you for being here. And finally, David Osterweil, founder of Fit Life Foods. Would you take a moment to introduce yourself, please?
Absolutely. Thanks so much for having me. Yeah, so Fit Life Foods, we are the leader in fresh, made from scratch prepared meals. We're the second largest omni-channel prepared meal company in the country, actually, and that's with just doing business here in the Southeast. So we have 13 locations where people come into our stores and get their fresh, made from scratch breakfast, meals, and snacks. We also have a subscription home delivery service where people are getting once a week, kind of a concierge style grouping of fresh, made from scratch prepared meals right to their door in this crazy time. And we do that subscription delivery work from Atlanta all the way down to Miami. And we like to say at FitLife, we're built for success-minded people who value their time, their health, and great flavor. So that's what we're focused on. And our core focus at FitLife is to elevate the way you feel. So whether it's by helping people save time in the meals or by actually helping with the way that people actually feel after they eat those meals. So that's what we're all about. I started the business in 2011, and here we are today.
Excellent. Thank you for joining us.
Yeah, thank you.
Each of the panelists will be asked a series of questions, and you, our audience, are encouraged to participate by asking your own questions in the chat. Each of your questions will be answered at the end of the presentation. If you have not already done so, I encourage you to put your name, your company name, and your contact information in the chat so we know who we are talking to and you introduce yourselves to everyone. So with that, we're going to get started. The first question is going to go to Vince Chalura. How many PPP loan applications have you received and already funded?
Yeah, that's a great question. We had over 20,000 applications. We had 26,000 applications actually, most of which were customers. About 2/3 of those were customers of the institution. Before the program ran out yesterday morning, we had about 6,000 loans funded and about 1.6 billion in dollars allocated to the program. So we thought it was a pretty big success. I think we anticipate the government allocating more funds for round two, if you will. But we had some pretty good success specifically with our customers, and we're able to provide some value. But a lot of banks got off to a pretty rocky start. Technology was an issue. Guidance from the SBA was an issue. But we were successful in deploying close to $2 billion in loans. So we're funding those over the course of the next 7 to 10 business days.
Thank you. So this next question is going to be for the entire group, and I'm going to ask each panelist individually to respond to this next question. Vince, I'll start with you again. Given the fact urban environments have been struck hardest by COVID-19, New York, New Orleans, and Detroit, do you believe this will invoke a suburban revival?
That's a great question. I think it's too early to tell. I think that, the lifeblood of our economy is some of these major metros. And I think it's naive to say that people are gonna get out of some of these pockets. But the longer this thing lasts and the worse it becomes, I think it's too early to tell at this point. But maybe the rest of the panelists can have better perspective.
Matt, same question to you. Given the fact urban environments have been struck the hardest, do you believe this will invoke a suburban revival?
I would tend to agree with Vince. I think it's a little too early to tell. I think the ability for people to get comfortable working remotely probably empowers certain people to work from suburban locations or smaller markets. I'm in Chattanooga. We haven't had anybody in the office really in the last 30 days. So we've been able to operate in a smaller market without any of the conveniences that a more urban environment would provide. So I think it probably gets people comfortable from that sense, but to actually say that people are gonna exit the more urban environments like a New York or a New Orleans, I would agree it's probably too early to tell. And I think it's probably hard to expect people to leave those pockets en masse or in a meaningful way.
Thank you. Larry, it is your turn. Urban environments, do you believe this will invoke a suburban revival?
No. Although it is still too soon to say, I don't think it will. I think that we're already seeing people leaving New York. And I'm from Detroit, and people are going back to Detroit. But I think the migration that's happening is going to continue in the basic patterns, coming to the low tax states or the better weather states. as people can work remotely rather than because of this pandemic, which I'm rather optimistic will not change our lives completely for the long run.
Thank you. And finally, David, do you need me to repeat the question?
No, I'm good.
Okay.
I mean, I'll answer from a kind of consumer perspective and consumer business perspective. And, I think that the co-panelists kind of summed it up correctly, which is, people are going to be, they're already making the transitions to some of these, whether we talk about people going from the Northeast and down to, communities like ours here in Tampa Bay. I mean, I feel like we're just going to see that kind of happen at a more rapid pace. That's just my perspective. Internally within each of the markets, I'm not knowledgeable in that quite yet.
Thank you. So the rest of the questions, until we change panelists, will be directed to Vince. Vince, what kind of debt service relief programs are being used with your commercial borrowers?
Kind of the easiest strategy for us is loan payment deferrals on loans that warrant a hardship. So, the two major food groups that we've really focused on over the course of the last month are obviously hospitality and retail. Those have been hit the hardest. Retail's gotten crushed, and hospitality is effectively no income. So we can pretty easily provide loan deferrals on those hardships, if you will, when warranted. And that's kind of a pretty easy strategy. We've had a lot of flexibility with our regulators, and it seems to be a pretty easy program within reason. So 90 days seems to be the path of least resistance. If somebody can pay interest only, great. If somebody can't, we'll do a P&I deferral. And if somebody needs more than 90 days, we look at it on a case-by-case basis. There's also, a lot of government incentive programs. There's EIDL, which is administered directly by the SBA. We talked about PPP earlier, which we've been administering kind of in an all-hands-on-deck approach. And there's a bunch of small programs. There's the Kathy Castor announced her program a couple of days ago. There's the Florida Disaster Relief Program. So a lot of different opportunities for people to approach. But I would say for us, the bank has been pursuing a lot of payment deferrals, and we've been pushing PPP pretty hard.
Thank you. How will COVID-19 impact the underwriting of future commercial loans?
Yeah, it's another great question. I mean, right now, credit is pretty hard to come by. So I think relationships are pretty key. So if you have a relationship with a bank or a banker, that's very important. I think generally speaking, in the immediate term, underwriting standards are going to be pretty stringent. And I think going forward, there may be a little layer of additional equity or more reliance on recourse on guarantor strength, because we're sort of entering uncharted territories. And if pandemics become the norm, or if they're always in the back of somebody's mind from a credit perspective, we want to make sure that we can really analyze risk. So I think in the immediate term, we're just being cautious and trying to service our customers and look at kind of gold-plated requests. And then going forward, depending on how bad this thing gets, the new normal may be a little bit more equity and a little bit more recourse on deals.
Excellent. What kind of additional requirements besides that, if any, are you seeing in approval for construction in SBA loans?
So right now, I mean, the focus has really been on PPP and payment deferrals. In terms of new requests, like if somebody came to us with the hospitality construction loan today, we'd probably say we need to take a knee respectfully. That's pretty obvious. Any type of construction loan would probably be put on hold. Obviously, we are funding any construction draws or any loans that are in process or loans that were approved or kind of in the pipe before all this mess came to be. But brand new requests that are coming to us, in the immediate term are going to be pretty tough to come by in terms of construction, unless they're, net lease, bond quality development deals that are cooked up and ready to go.
So with that, what is financeable right now? Retail, office, industrial, hotel, multifamily, what is?
I think hospitality is probably virtually impossible to finance. Some select net lease retail would probably be financeable. I've approved a handful of very strong credit tenant retail deals since the pandemic hit. Industrial hasn't really missed a beat. Storage, office is probably the next major food group to get whacked. Haven't had a lot of requests come through office-wise. Parks, like mobile home parks, seem to continue to be financeable. But I think select retail, there are certain retailers that are still kind of full speed ahead. I don't want to give specific examples, but there are 3 or 4 different tenants that have signed leases over the past 2 or 3 weeks that, not necessarily surprising, but given the environment, it's a little bit, you would think that they'd want to take a knee and survey the landscape, but leases are still getting signed.
I agree. A little bit harder to have them signed and convince them and give them that level of comfort, but that's good to hear. That's very good. So we're going to switch our panelist conversation and focus on Matt Partridge from HUTTON. I'm going to ask you a question, and then I am going to follow up with a question for the entire group and ask them individually. Matt, your question is, what kind of rent relief programs are you using with your tenants?
So we've fielded quite a few requests from our tenants. I would say we have about 475 tenants. Of that, about 175 are small shop, and we've probably heard from 100 of those small shops, as well as most of the nationals. And we have not agreed to any rent relief programs at this time. We've taken an approach that we're going to wait and see how all of this plays out. I mean, we're only about 30 days or so in, maybe a little bit more. And we're reserving all our rights under the leases, but we're also not defaulting them for April payments if they're not able to make them. In general, we're just trying not to overreact. And I think the more clarity we can get around state, regional, and federal transitions to a more stabilized situation, combined with understanding the individual tenant situation, the better we're going to feel about making an informed decision around rent relief.
Thank you. So the next question is to the entire group. Matt, I'm going to start with you for a response. Can you elaborate on how the stimulus package has either benefited you or obstacles faced when applying, and who benefits the most in your opinion?
We've been fortunate enough that we obtained stimulus funding through the PPP program on Wednesday. So just ahead of the announcement that the program had been exhausted, although we were approved earlier in the week. This has allowed us to keep the majority of our team together without materially disrupting our cash flow. I think for us, with respect to the obstacles, obviously the uncertainty and the changing of the terms that's occurred since the stimulus program was passed has been a little frustrating, just because the goalpost, so to speak, seems to keep moving. But the limited capacity of the program, I think, is also another obstacle, which hopefully, to Vince's point, they'll pass some additional relief funding for that. In terms of who benefits most, I think it was structured in large part to inject liquidity into the hands of individual consumers who are in need of increased liquidity, especially on the lower income scale, and then into businesses who otherwise would have probably needed to make more meaningful cuts if they didn't get that injection of liquidity. So I think it's working to some extent as intended, but the best laid plans never fully come to fruition the way they're intended.
Larry, I'm going to ask you the same question. Can you elaborate how the stimulus package has either benefited you or obstacles placed when applying, and who do you think benefits the most?
It hasn't really affected me really, because I'm just one guy and I'm still working. So it hasn't really benefited me, and it may in the next round, but I don't think it's going to. I got caught up in, I have a big bank relationship, or a relationship with a big bank rather than a local bank. And so that didn't work out that well, but no big deal. Who will benefit the most? Some targeted industries like the airlines, but it will trickle down. I'm hopeful that it's going to keep wheels turning, but I don't have any more insight than that.
David, same question.
Yeah, so we got our application in over a week ago. We were actually funded last Friday. So we were able to get funding last Friday under the PPP loan. And, we're hopeful that it's going to be helpful and supportive. As we're seeing some of the retail decline of sales, we're seeing a little bit of movement upward with our delivery business, but we're still seeing massive, declines of retail, simply because since we are essential, we can stay open, but we have no co-tenancy. So the traffic in these plazas, obviously, with everything else is completely been eroded. I would agree with the comment that was made earlier that the goalposts just seem to be changing with this, and understanding how this is going to get, the structure of it and how it's used. And I mean, we still have our staff. We haven't actually made any cuts to our staff, so we're fortunate from that perspective, and look to obviously use the funds to continue to do that. So if it's a short-lived crisis and we get through this over the next 4 or 6 weeks, I think it'll probably be okay. If it ends up being 8 weeks or even longer, I think we're gonna it'll be challenging. I think we're all gonna have to revisit it.
Thank you. Vince, you're the final panelist on the question. Do you need me to repeat the question?
No, I think I'm good. We're still trying to understand what's going on with this Main Street lending program. We've been inundated with PPP, and that it's been kind of a bank-wide approach to focus on that program. And again, it's the hope that some additional funding will get allocated to the PPP program. But I guess my perspective will be PPP specifically. There's been a tremendous amount of obstacles. We've received kind of funky guidance from the SBA, and by the time the guidance was clear, it's just been confusing and cumbersome. So, it's been, we sort of have stopped everything we've done and had an all hands on deck approach. Really, everybody in the bank has been focused on PPP. We've been able to service our customers. Unfortunately, there wasn't enough money in the program for those folks that probably needed, everybody that needed the funding didn't get it. And people that were organized and on top of of all the information were able to, get funded. But I think more stimulus needs to be had, and the devil's really in the details on some of the specifics. And I think going forward with round 2 of PPP, there'll probably be some more restraints and restrictions on who accesses the money, and then just kind of understanding some of these other programs, because there are a lot of other stimulus dollars out there. Again, I mentioned Main Street, still, a lot of information to be digested on that program, but a lot of money is allocated. So, to be determined.
This wasn't, so if somebody has already applied for the PPP, they didn't get their funding, do they have to reapply if additional funds are released, or can they just keep their application out?
So I'll speak for Valley's perspective. If you're in the queue and you've made application with us, you sort of are in line. And if money gets allocated, you'll be kind of back in line where you left off. So there's no need to reapply unless, obviously, there's a lot of unknowns unless the SBA would make a requirement for you to reapply. So we're taking the approach that we're still approving applications internally. And then once the funding gets released, we'll push it to the SBA and get, seek to receive an E-Tran number. And once you receive an E-Tran number, the money is set aside for your benefit, if you will. And then we have 10 days to fund from E-Tran allocation. So we're taking the approach that, we're not requiring folks to reapply.
Perfect, thank you. The remainder of these questions will be for Matt Partridge from Hutton. Matt, will COVID-19 cause you and other landlords to increase your liquidity reserves moving forward?
We're fortunate enough to be pretty well capitalized as an organization, and we've been able to work with almost all of our banking relationships to strategize around how to deal with some of the lost liquidity we're experiencing. So I wouldn't say we're increasing liquidity reserves as much as we're trying to focus on maintaining our existing liquidity position, both to weather the near-term disruption, but also to make it sure we're in a position to opportunistically invest over the medium term once the market stabilizes. So we're probably a little unique in that respect because we sort of have contingency plans for, I'm not going to say situations like this because I don't think anybody's prepared for situations like this, but we do have contingency plans for disruptions, and I think contingency plans have proved to be effective so far.
Perfect. What percentage of your portfolio is retail? And does COVID-19 change Hutton's long-term portfolio strategy?
Yeah, so we have a few office assets and a couple medical tenants and some development projects that are multifamily and self-storage. So we have some diversity on the portfolio, but in terms of cash flow, the vast majority of our cash flow comes from retail-oriented assets and tenants. Approximately half of that cash flows from multi-tenant properties and power centers and grocery-anchored shopping centers. The other half is spread across single-tenant net lease assets that are retail-focused. So, I think everyone, including Hutton, needs to at least take a step back and evaluate their existing strategies and how that's performing right now. We should all evaluate our strategies probably on a consistent basis, regardless of whether or not there's a global pandemic. At the end of 2019, coming into 2020, we did evaluate our portfolio makeup, and we're poised to make some efforts to redeploy capital out of our multi-tenant and power centers and into more single-tenant and non-retail focused properties. So from that perspective, I would expect our capital allocation and portfolio strategies will probably stay in place in large part, but the execution's obviously being materially delayed because there's not a lot of transactions happening right now. Over the long run, I'm sure our tenant makeup and sector focus will evolve, especially since we're primarily a development company. And therefore, from a development opportunity standpoint, that's largely dictated by what sectors and tenants are growing. So I expect that to change, but we feel pretty good about how we're performing so far.
Thank you. In your opinion, what national retailers are in jeopardy of not surviving this pandemic?
Yeah, that's a tough one. I'm not in a position to speak to which tenants have the ability or not to survive.
How about uses? More generalized.
I mean, I think there's certain sectors that are obviously more impacted by others. Obviously, gyms, theaters are the two that are in the news, and there's been a lot of news around specific tenants in that place. I'm not going to put an X on the back of anyone. But obviously, investment grade ratings are intended to reflect financial strength of companies. So I would expect most of those investment grade tenants to be in a position to survive. And from what I've seen so far on the transaction side, there still seems to be a demand, particularly on the single tenant net lease side for those types of tenants. But I can definitely say for any company, national or local, retail focused or otherwise, when cash flow is interrupted or impaired and they have lower leverage than a competing company, that usually equals higher free cash flow and higher liquidity, and those companies are always going to be in a better position to survive and flourish over the long term than the ones who tend to utilize more leverage.
So what impact will essential businesses tag have on a deal approvals moving forward?
Yeah, so we're already seeing it somewhat. A lot of the blasts from the brokers are using that tag. And I think it does make a difference. Now whether or not they're applying it on a broader basis than maybe they should be, I don't know. But I think just like service-based, internet-resistant, and omni-channel, those are all taglines that have been used over the last 5 or 6 years. And I think they do make a difference in terms of how the tenants are classified. I think it helps in terms of approvals for us. We're going to be mindful of what's considered an essential business per se, but we're still going to do our normal underwriting and evaluate the factors that we would normally evaluate when it comes to doing business with or without, or not with a particular tenant.
So how important will an omni-channel presence be in evaluating prospective tenants?
Yep. So for us, it is a meaningful factor. I think it has a strong connotation to success in the industry. I mean, the omni-channel approach allows a lot of different retailers to compete on a basis that maybe others can't. If you look at the most successful retailers in most of the major retailer sectors, almost every one of them has a strong omni-channel presence. So I think it's only appropriate to continue to try to target those tenants as tenants that we do business with and work with. So I think now more than ever, it's pretty imperative to have that omni-channel approach.
Thank you. When looking at financials, what will change when approving deals, if anything?
So, I mean, we have a pretty comprehensive financial review process, so we'll undoubtedly make tweaks to it. I think in particular being mindful of the tenant's overall rent obligations, and probably for us as developers, and Larry may have a view on this, having been with Zaremba and some other developers, but I think as developers, you want to understand and really focus on what's in that work letter. Because obviously we want our rent and returns, which are tied to project costs, to be focused on an investment that has residual value over the long term and translates to multiple tenants, not just the tenant that you're doing the development for. So we try to stay away from funding the cash register, for instance, because that obviously is not a translatable item that is going to have long-term value. So I think it's going to ebb and flow based on the sector and the tenant type, but it's certainly meaningful today.
So we've witnessed a lot of good retail spaces opening up. Is this a sign of things to come? Will it go down first and then rebound? Any key insights?
Who was that for? Matt's muted.
No, that was for Matt.
He's currently muted.
Yeah, Alex, unmute him.
Cool. I mean, I would say I think the high quality retail spaces are always going to be in demand, and it's going to be a sort of musical chairs effect, and over time the bottom end of the market will sort of become obsolete until demand fills it back in or it becomes repurposed. So I think anytime you have high quality retail space, you may have a dip to your point, but it's going to come back because supply and demand will shift the tenant base around.
Perfect, thank you. The next round of questions will be for Larry Silvestri. Larry, how will pandemic and force majeure provisions be utilized in leases and purchase agreements moving forward?
Well, I have an opinion about the force majeure provisions that I want to, without getting too far into the weeds, give you to back up what I'm going to say. In my opinion, a well-written force majeure provision that we had before our eyes were open to the pandemic would cover the appropriate things in this situation. And that is, it allows for delays that are caused by reasons out of one's control. Acts of God, some list, they say you're supposed to list all the ones, but you can't. Leases are too long already. But if you were to say that a current force majeure provision didn't protect somebody who had to close from being in default, from not operating, that would be a misinterpretation of the law. By the same token, force majeure clauses that are written properly in leases say that it doesn't excuse the tenant from the payment of rent. So a lot of the things I'm reading right now, pontificating by people, are about how to use it as defense for the non-payment of rent. And even if the language in the force majeure clause doesn't spell it out, which it should, I think if you ever went to court, which you can't do because it costs too much money, tenants will lose. So they're back to the table negotiating. So going forward, I've already seen my first post-COVID-19 force majeure clause from a big law firm, Ackerman. And it was inserted into a purchase and sale agreement for dirt to be developed into housing. So the concern, after we're at the end of the stage of negotiating, got thrown in there because the concern was that they wouldn't be able to get approvals. There were things that are going to happen, it's going to tie them up, which are outside what we normally anticipate as approvals because of quarantine and everything else. So they beefed up the language, but in my opinion, just a basic force majeure would have protected them because that's beyond their control as well. So we're going to see a lot of different things. We're going to go through a lot of language. Leases will become longer, but I don't think that it's going to impact the tenant's obligation to pay rent unless tenants have the leverage to get landlords to give on that when they really shouldn't. So I as a landlord, I would resist that. And as a tenant, representing a tenant, I would say the tenant is the producer. The tenant generates the rent. The rent goes to the landlord. The landlord gives it to the lender. Everybody has to, cover their risks, and leases are an attempt to allocate risks. That's all you can do. My goal has been with my clients to get them to have shorter leases, not longer leases. Because most things, when you have something like this, we all go and pull out the lease and see who had the better drafts person. But if the tenant can't pay, it still doesn't matter. So that's me pontificating.
Thank you. This next question is going to be for the entire group. Larry, I'm going to start with you. How important will it be for owners to do the right thing versus what is right financially?
To the extent that those two things diverge, it's the right thing that you have to do. Because again, our industry, this is not mine, this is someone else, Ira Nieslick. Our industry is like a three-legged stool. Tenants, landlords, and lenders. And you need all three legs. So it's got to work. And I've been through many cycles. I won't know what the next thing is that will cause us heartburn, but there'll be something else. And we'll come out of it. We'll learn lessons, but the lessons for that battle won't necessarily help us win the next battle. So I think it's important in our industry for landlords to work with the tenants. They have the ability to see the whole picture, particularly if we're talking about multi-tenant spaces, grocery anchored, power centers, malls. So the landlord should kind of be, in my view, in a leadership role, trying to help the tenants through it. And I see that's happening a lot and makes me feel good about our industry. Lenders are another issue. Lenders have to allow some deferrals, or they don't want these to be problem loans, and they don't need to be problem loans because this, in my humble opinion, is a short-term crisis that we're going to emerge from.
Perfect, thank you. So the same question, David, do you need me to repeat it? Alex? Hold on, David. Alex, unmute. There you go.
There we go. Great. No, I mean, look, our responsibility is to our team and our employees and our customers, and that's where our primary focus is. We also view the relationship with our partners, and our landlords are important partners in that relationship. But, ultimately we have to think about kind of where the business is going to progress and where the environment's going to progress. And right now, I hope it's a short-term period of time, but we just don't know that. So that's why the partnership conversations we're having with landlords right now is really important to discuss what that looks like. And, I don't think anybody needs to make any quick decisions on what happens, but I think as we get through the next, we're learning new things, I think, here week by week. And I think it's being patient and looking at where we are probably in the next 2 to 3 weeks.
Perfect, thank you. Vince, same question, right thing versus right financially. And you're still muted. We're gonna unmute you any minute.
No problem. Yeah, I mean, it's a fine line. I think lenders, at least our bank, has been very reasonable as it relates to payment deferrals in the right circumstances. If there's a retail center that all the tenants continue to pay, I don't think it's appropriate to ask for relief. But if a retail center is feeling a hardship and a landlord frankly just isn't getting any income, I think we're going to be more than reasonable in providing a deferral, and that deferral will depend on how long the pain lasts. So and then kind of in the middle, if half the tenants are paying, or if you have a grocery anchored center that the anchor tenant is paying rent on and the residual isn't, maybe we offer an interest only deferral, or you defer the principal and pay the interest only versus a full deferral. So I think there's give and take. But I think that, a lot of people are being proactive, which is, a positive and a negative, but you can't just ask for a deferral to ask for a deferral. I think everything needs to be approached practically, given the specific circumstance, but we've been very reasonable in our process.
Thank you. Matt, same question?
I think to Larry's point, it is sort of an interwoven ecosystem in the sense that, you have consumers, you have the retailer's got all their business partners, whether it's their suppliers or landlords, there's lenders, and then there's employees, and those employees also happen to be consumers. And so it is sort of all interwoven. And so if somebody chooses not to do the right thing, or chooses to position themselves within that ecosystem to their own benefit at the expense of everybody else, you're exacerbating the problem. And obviously, if multiple groups do that, it becomes a domino effect. And so I think, to David's point, having some patience, seeing where it all plays out, to Vince's point, being practical, not letting people overreach, but also not just putting the brakes on for everybody. I think all of that makes sense and lends itself to sort of a either shared pain or obviously reduced liquidity, but everybody still comes out of it the right way. But I think if everybody's focused on their own financial viability, it does have the potential to create some long-term problems. So I think you always have to do the right thing.
Thank you. This next question is going to have 2 panelists' participation. The first one is Larry. COVID-19 has impacted brokers by causing additional delays to leasing commissions. Should they file liens? How will commission agreements be affected by COVID-19 moving forward?
First, the liens, provided that your commission agreement has the magic language from the Florida statute. If you have any question about being paid or being concerned about having to put third parties on notice, file the lien notice. It's a fairly easy thing to do. I've done it a few times for clients, and it's been helpful if you do it on a timely basis. The only one I had a problem with was a sales situation where the client broker was concerned they weren't going to get paid because the seller was going around them to the buyer. And it turns out by the time they found that out and we filed the lien, it had already closed. So they've got a ripe lawsuit, that's all. So I would say look into it. And if you're going to do it, I would communicate with whoever the party is that's going to owe you the commission and tell them first. So they don't just get a notice from a lawyer that says we filed this lien notice. So they know why you're doing it, not that it, and I would present it as not because you're concerned about that person, but passage of time. And I've seen things about brokers not getting paid, and I'm not exactly sure what the contractual basis for that is, because I don't, again, think force majeure means that you don't owe the commission, unless the commission's based on when the retailer opens, and then it's not due yet. In the future, I don't know. You can put language in your commission agreement. What I'm seeing right now is a focus on disclosure of the risks of viewing properties. Right now, the Florida Realtors have put out a form acknowledgement, so that if you're a broker that is showing space, or if you're an owner, you get the party to sign this as an acknowledgement that they're assuming the risks of being infected. So that's today. Will that be tomorrow? Will that continue on? Maybe so. It's until there's a vaccine. And again, there could be another virus comes out, but we live and learn.
Let's hope not. Same question to Matt from Hutton.
Yeah, I mean, I would agree with Larry. Please, I mean, I'm obviously on the other side of engagement.
Yeah.
Please let us know if you're going to file a lien. We want to know that. I mean, we put a huge premium on our relationships with brokers, so we're doing everything that we can to work with them and make sure their commissions get paid. So it's hard for me to say how this is going to evolve and be affected by COVID-19. I'm not an attorney, so I don't know all the provisions that could be inserted. I don't know if you can put a MAC clause or material adverse change clause in there related to some of it. My sense is it's probably not viable, but Larry would know better than me. But I think I would say to any landlord or anybody dealing with a broker on the phone, if they've earned the commission, you have to pay them. I mean, they've earned that, and in the long run, that's good. That approach is going to benefit you.
Thank you very much. The remaining questions will be directed to Larry. Larry, reportedly insurance coverages that includes business interruptions have been denied since physical damages are not relevant, or specific language excludes the word pandemic from coverage. What changes do you anticipate within the lease relating to the requirement of the inclusion of environmental changes?
I predict that lawyers will come up with language to put in the lease, and I predict that it's not going to change the economics or the balance of what's happening. Sure, I could say that if something like this happens again, the tenant has to pay more money. As a tenant, I can say that if this happens again, I get to defer rent for a certain period of time. But I don't see a good business person agreeing to that up front, because each circumstance like that is out of the ordinary, and it's hard to deal with it in a lease. So why leases get longer and longer. And the reality is it should be maybe an insurable matter. It used to be covered under insurance. At least it wasn't excluded. And the question was whether or not it was in connection with a physical damage. And the legal argument that's out there is that contamination of a property is physical damage. So there's one case out there where the contamination was by ammonia as a chemical that contaminated, and they recovered. Is a virus the same thing? It's going to get litigated, I'm sure. But before the SARS event in 2002, 2003, it wasn't excluded. As soon as the SARS came up and the litigation ensued, the insurance companies did what they always do. It's what they did when environmental started becoming a problem in the mid to late 80s. They excluded. So I don't see, unless, well, I guess there's another avenue I should mention. There is a possibility that government intervention will change this. There are some legislation in some states advancing, saying that insurers with business interruption, or insureds with business interruption insurance, should be able to recover. But that really requires a change in the law. And the lobbyists for the insurance companies have a lot more clout than even ICSC.
Thank you. Thank you. Thank you. The next question is going to be directed to David. David, how have you had to pivot to keep Fit Life Foods performing during the COVID-19 pandemic?
Yeah, so it's from our perspective, I mean, we talked about the nature of an omni-channel business. I mean, this has been something that we have, really built up over the last couple of years. So it's been important. But where our main pivots have been, you're hearing about all of the, health and safety precautions. I mean, we've completely stepped all of those up at our culinary center, which was already state of the art from a safety perspective beforehand, but we've kind of elevated that even further at our culinary center in Plant City. At the stores, kind of the same thing, the social distancing. We're not allowing consumers to open up doors. We're actually doing that for them. We're doing it gloved. We've got the masks on. We're doing all of those pieces. From a business strategy perspective, we've really taken two approaches. The first is really leaning into this as an opportunity that may not be necessarily realized today, but realized in the future, and figuring out what we can do, recognizing kind of this opportunity. So one of the things that we've said is, how do we take a more digital approach? For example, we have a program, wellness coaching, that happens in our stores. And we've said, we're going to take a look, which is one-to-one wellness coaching. We'll go through that. And right now we're in the process of developing a digital kind of face-to-face Zoom-like module for that we can help grow our business into the future. So I think the retailers have to look at how you can continue to grow and elevate and innovate your business. The other piece that we're focused on is continuing to move our strategy forward, on the backside as well. So, we're looking at our growth for 2021. We're looking at the markets. We're focused on, opening up new locations for next year. But this is always in the back of our mind now. And we're thinking about, typically when we went into a market, we might build, 6 or 7 locations. Now we're building a handful and adding more of our subscription delivery into it as well. So I think the good retailers are thinking about innovation, and they're thinking about their consumer experience, both in-store and also, through the digital format.
So with those changes implemented, has your average ticket changed?
Yeah, so the average ticket in store has definitely gone up. We've seen an increase in store probably by about 15 to 20%, but obviously we've seen massive traffic declines. So we don't have the co-tenancy, obviously, to help, which is having a real pressure, putting a lot of pressure on our retail stores. But yeah, in store, it's definitely gone up because people are, they're stocking up and they're trying to limit their visits, I think, wherever they're going.
Thank you. So how has COVID-19 changed your site selection criteria moving forward? Are you looking at co-tenancy, size, demographics, urban versus suburban?
Yeah, I mean, I don't think we've gotten to the point where we've necessarily said we're going to completely reevaluate how we're looking to do this. I think our focus is still, we're still looking for, our consumer is success-minded people, right, who value their time, their health, and great flavor. We want to be backed up to great residential. That's really important to us. We do want to have, ours is more boutique fitness that we're focused on. I mean, we have a couple that are some big box fitness that we're co-tenants with, but we definitely like the boutique fitness. We like a lot of the lifestyle players, whether it's retail or whether it's even some of the things that are obviously closed in this environment. But no, we're going to continue to move forward. I do, we've encouraged our team and looking at everything. We have to take the long view here. We can look at everything and, hey, this has been a really challenging last 6 weeks for everybody. Or we can say, what's the environment going to look like a year from now or 2 years from now? Will there be changes? Yes, but I don't think we're just going to make a wholesale switch with the way that we connect with people. I mean, humans are social animals, and I think we do want to be with other people, and we want to connect with other people, and that's really important.
So with that, do you foresee a reduction of occupancy in restaurants and food concepts? And will social distancing concept be the new normal?
Well, I can't speak to the restaurant world because I'm not in the restaurant world since we're more in the food retail world. So I just don't know. I can't speak to it. I know from our perspective, we do take a very kind of one-to-one approach with folks. I do think we'll see, where people are just gathering in mass. We'll have to see how that plays out. But in restaurants, I mean, we've all been to restaurants in New York, and we've seen people, put together like sardines. And then we're in restaurants, I think in our community where it's a little bit more spread out. I think like our community will probably, that what we see in our community will probably be more of the norm, I would hope.
Thank you. So I have a question for the entire group, and I'm going to start with you, David. What is your definition of when this is over?
Yeah, boy, that's if I had that answer, I think I'd hold the winning lottery ticket right now. I mean, I think we're already starting to. It's interesting. I mean, just as you hear the media week to week, because the media sets so much of the agenda about what's going on in this country. And I think as we continue, I think people are getting restless. I think they're starting to get restless. And I think we're all feeling that in our homes day to day. But we also don't want to jeopardize safety, and we don't want to jeopardize the folks here, especially who are the most susceptible to this. But as I start to think about week by week, we're getting closer. I think we're starting to see some of these levels. I mean, I'm watching the same news that everybody else is watching, and I think we're starting to get there, hopefully. I think 4 weeks from now, what's the world going to look like? And I'm an optimist. I'm an entrepreneur. I'm an optimist, and I think that we're in a much better place in 4 weeks. And I think in 8 weeks, we're in a much better place. I speak to some of my investors and private equity partners, and, the sky is falling, but they're invested in multiple different businesses that have other components, so it's just different.
Thank you. Vince, same question. What is your definition of when this is over?
I echo some of the same sentiments as David. There's people getting back out and about, and I think people are just frustrated with the negativity in the media, and are just looking for refreshing, positive news from a financial perspective, from a banking perspective. I think seeing some of these relief requests slow down, and seeing some of the normal activity and loan activity start to pick back up is going to be extremely refreshing. Kind of get back to our day jobs, and really everybody getting back to kind of the normal. Obviously, the new normal may be a little bit different than it was 6 or 8 months ago, but just getting people back in the office, folks back to work, kids back in school, etc. I think that's going to be very, very refreshing.
Thank you. Matt, same question.
Yeah, I think the last statement by Vince, folks back in the office, kids back in school, people gathering out to restaurants, that's when it probably feels that way. I think we'll see if we get that sort of demarcation line where you have a vaccine that everybody feels like, okay, now I'm not susceptible to it. If that doesn't come, I think it's a pretty protracted new normal, but I think that it's just going to feel different. But if we can get to the point of all those social activities and gatherings happening, I think then it at least feels somewhat over.
Thank you. Larry, same question.
A lot of the same answers. I think we're transitioning to opening up the economy. I think that a vaccine is definitely a game changer, and everybody says that won't be till next year. So depending on what your definition is, over maybe is when the vaccine is available and ready. But I think we're going to be seeing a new reality. The fact that the impact on our economy really has been artificially imposed. As we lift that artificial imposition, I think the economy will continue on an upward trend. And if we're allowed to, we're going to get back to a good place. We're going to have some bumps and bruises, but I think it's going to be okay. I think stores are going to start opening, I think, in May in Florida. I think we're ready to transition. Phase 1, according to the guidelines, which means no bars, but restaurants with social distancing, which will make a big difference in my life. I'll feel like things are a little more normal. So I think that's going to start pretty soon in May, not in April, but in May. And then
Perfect.
there.
Thank you very much. So now we're going to address some of the questions that have been in the chat queue. The first question is for Vince. Did bank prioritize the PPP applications, or were they processed on a first come, first served basis?
It was a little bit of both. We really opened up our application process to our customers, and really, frankly, gave them preferential treatment. I don't know if that's appropriate to say or not, but it's the fact. And just going through it, again, I mentioned we had 20,000+ applications, last weekend, and there were certainly more that came when independent contractors could apply and 1099s could apply. So we were selective, and we did put our customers first in the process. But we're liberal in how we define a customer. We would affiliate customers with customers, or if we had kind of a parent entity with tributaries, if you will, we try to process all those at one time. So we're a little bit liberal, but we're certainly giving preferential treatment to our customers.
Thank you. Next question is for Matt. What tenants or sector will you be more hesitant or choose not to develop or underwrite on the lease side in the new normal?
It's a good question. I think probably be more hesitant to the gyms. Although I do think they have long-term strong fundamentals. I think it's probably less so tenant and sector, and more so being a little bit more sensitive to capital structure. You have a lot of retailers that are owned by private equity, and sometimes that's fine, and sometimes the sponsorship is irresponsible. And so we'll probably be a little bit more sensitive to who that sponsorship is when it comes to the private equity owned tenants that we deal with, because at any point in time, that leverage can become a huge problem for those tenants. But I think every tenant has a place to some extent, right? I mean, sporting goods retailers still have a place in brick and mortar America. It looks different than it used to, but they still have a place, and they've obviously been meaningfully impacted, but we would still look at them as an example.
Thank you. Next question is to Vince. Can the PPP loans be used for anything, or do they need to be used for paying employees?
Yeah, 25% can be allocated for rent, mortgage, or utility payments, but the majority, 75%, has to be strictly allocated to paying payroll and employees.
Another question for Vince. Will we see a decrease in new deals next year?
I think we'll see a decrease in deals in the coming year. The rest of this year and the coming couple quarters. I don't know about next year. I think people are going to be strategic. I think it's too early to tell. It's not a really great answer, but there is a lot of pent up demand, and there could be new opportunities that evolve. But I think we're going to have a little bit of pain in the immediate term for new transactions.
Same question to Matt. Will we see a decrease in new deals next year?
I think it's a little early to tell. I think it kind of depends how the next 45 days or so go, because maybe 60 days. Because if you have a rebound, if you start to see retailers open up in May, restaurants opening up in May, I do think that pent-up demand is there. And I think the disruption hasn't been long enough for everybody to kill all of their deals. And I think people have been willing to give some time for this to work itself out. But if you get into a 90, 120-day period of disruption, it's a lot harder for people to get comfortable deferring those timelines. And then I think some of those deals fall apart that otherwise would materialize. So I think it's a little early to tell, but reality is, yeah, there's probably slightly fewer deals, even if we came out of this next month, and the longer we're in it, probably the fewer deals there are.
Thank you. The next question is for Larry. As tenants are active in site selection, what recommendations do you have on the legal side for signing a lease in this new normal? Are you seeing language added for delayed rent commencement related to the word pandemic?
Not yet. I expect to see them. But as I said, the one thing I've seen so far was in a purchase and sale agreement. But I haven't seen any new drafts within the past couple of weeks, but I expect language like that. But again, I think if you have the language that we normally use, which protects you when there's a delay that's not within your reasonable control. Now, some force majeure provisions are more specific. It's, act of God and that you can't possibly control. But yeah, I expect that we're going to have language. I expect that, there's some legitimacy again to delays from governmental entities. And I should mention, there's one exception in my mind to the force majeure not excusing payment of money, and that's if you can't bank. I mean, if the bank is closed and you can't do it, well, then that's not within your reasonable control either, or if the obstacles are such. So I do see maybe some more language explaining that, and I definitely think people need timelines that accommodate the new normal.
Thank you. This next question is for David. What time period are you thinking is the tipping point for most retailers in terms of closing? 60 days, 90 days?
I think it's going to be on a case-by-case basis. I mean, I think everybody's in kind of a different position and different situation, and it's all going to be case by case. I can't speak to it specifically.
So that completes all of the question and answers. I have one more question for each of the panelists. I'll ask you individually. David, I'll start with you. Final comment, personal or professionally, what has been your overall experience or value that has been changed due to COVID-19?
Overall experience or value? Well, I value my wife for doing an amazing job with my children that are always coming into my office during the course of the day. So that's been one of my the things I value the most. But no, if experience, I mean, I think what I've kind of experienced during this has just been the unbelievable resiliency that I've seen by the team. And I think a situation like this is just making, from my perspective, our team stronger and really kind of coming together in a very unique and different way. And to me, as a leader of, a business that has 200 employees, I mean, it's really inspiring to see that. And, I think through adversity comes strength. And it's been something that I have just really valued during this time.
Thank you. Vince, question to you. Personal or professionally, what has been your overall experience or value that has been changed from this COVID-19?
Similar to David, I think patience with my family has been a key takeaway. Kids jumping all over you, people screaming, a lot of time together, and it's a great opportunity to take a step back and really embrace the opportunity to be together for a prolonged period of time. So we all sort of neglect that, and ultimately this thing will pass. And I think being close with the family is a seriously important thing. And then again, the same comment, resilience. Our employees, we've had people step up and really show their true colors, and it's been really refreshing to see folks kind of tackle from a bank-wide perspective this very unique PPP process. We've had individuals get curveballs thrown at them all the time, and we had folks literally working all night for the better part of a week and a half So, resilience and people coming together for the benefit of getting this money out to the consumer and the small business so that they can ultimately survive. And in the grand scheme of things, I don't think the bank's going to make a whole lot of money. We are going to retain a bunch of customers, and we're doing our part to help the underlying economy and really come together and get through this as a group. So I think it's togetherness and patience.
Thank you. Matt, same question?
Yeah, I would be remiss if I didn't thank my my wife for the same situation. I've got a pretty hyperactive 5-year-old who would probably prefer to be on this webcast if he could. No, I think time with my family has been something that I've valued quite a bit as part of this, because I do spend quite a bit of time at the office, and so the ability to work from home and spend time with them has been terrific. And again, I'll echo what Dave and Ben said, which is our team has come together, and they've had some pretty trying experiences and circumstances to work through. But I would also highlight a lot of our partners. I mean, this is I think most people on this cast would agree that this is an industry of relationships, and it's been great to see how supportive our relationships have been, how much dialogue is available out there, how much understanding and support is coming through, whether it's from the lenders or the tenants or some of our service providers. Everybody seems to be working together towards a common good, and that you'd hope to see that. You don't always see that, but I've been very appreciative of how everybody has tackled it, both internally for us and externally for our relationships.
Thank you. Larry, same question?
Well, I'm going to answer it a little differently. I'm going to answer what it is I realize I miss during this time.
Okay.
I don't have little children that my wife has to help me with, but we have a grandson, a 16-month-old grandson who lives 0.7 of a mile from us. But we're honoring social distancing, and so we haven't seen him, and we haven't been able to hold him. We've seen him. We've actually seen him on the porch waving as we walk on the sidewalk, but we've been honoring the social distancing, and I really miss being able to hold him.
Thank you. I'd like to thank each of the committee members, Michael Ann Murphy, Sheila Suhar, Tyler McCrae, Alex Wright, who's been operating behind the scenes. I'd love to thank each and every one of our panelists, Vince Chalura, Matt Partridge, Larry Silvestri, David Osterweil, and all of you participating with us on this call this afternoon. I hope that whatever the word over means to each one of you, we find it quickly, and that you find health and happiness and stay safe and have a fabulous weekend. Thank you for being with us.